So when it comes to choosing a high yield savings account to invest in, there's nothing different than you might check on before you make some money or invest some money into a regular savings account. The critical elements are really quite the same. What might differ though is what you focus on within certain criteria. Let's go over it. So the most obvious factor you will need to check before you choose a savings account is the interest rates offered by that account. When it comes to high yield savings accounts, since it's still a new concept, in addition to checking on how much the interest the account currently pays, you might also need to check on if the rate offers is a standard rate or if it's an introductory promotional rate. While you're at it, you might also need to find out how much or how the interest is compounded, or just check on the effective annual equivalent rate. For those of you who do not know, the effective annual equivalent rate, which is also called the annual percentage yield, is the real interest rate an investment like a savings account will give out after accounting for compounding. The rate is usually given by the financial institution itself, but if they haven't, you can also calculate it yourself by using an online calculator like calculatestuff.com by feeding the interest rate and the compounding frequency into it. This calculator also has the option to calculate APY for a specific principal amount. Then high yield savings accounts tend to have certain conditions like requiring a minimum initial deposit amount or a minimum balance maintenance. Check on these and determine if these conditions you're personally comfortable with, because failing to meet those conditions can incur you some fees or charges, and at sometimes might not really qualify your account for the higher interest rates that you hope to receive. That brings us to the next important factor and that you need to pay proper attention to: the fees and the charges applicable to your account, and that is from the financial institution. Do check on whether these types of charges and why they are applied to again determine if you are comfortable with those. So another very important factor that you need to check on is whether the bank you're going to open your high yield savings account is regulated and is insured or not. Now, most of the time, every bank, online or not, must be regulated and insured according to the law. But it's still better for you to know that for sure. Now, the regulatory body for the bank will of course differ from country to country, but a regulation will for sure be in place. Say, for example, in the US, savings accounts are backed by the Federal Deposit Insurance Corporation, or the FDIC, for up to $250,000. And all banks, including online banks, are regulated by the Comptroller of the Currency and the Federal Reserve System. And say in India, savings accounts are backed by the Deposit Insurance and the Credit Guarantee Corporation to a maximum of 500,000 Indian rupees for both the principal and the interest amount. Apart from that, the banks are regulated by the Reserve Bank of India as well. So in addition to all these, a few other things that you can check on whether the financial or the specific financial institution, it allows you to link your accounts to other bank accounts or other brokerage accounts. If they do, what restrictions they have for doing so, what conditions they have on accessing money, like do they offer online banking or debit cards or withdrawal charges or other general elements of that sort. Now, as for how you can find high yield savings accounts providing banks, well, that's not going to be difficult at all since you have the internet. Just Google it out and I'm sure you'll find hundreds upon hundreds of online or traditional banks that offer this particular product. Other than that, there are several organizations like Forbes, Fortune, Bankrate, CNBC, NerdWallet, Investopedia that do a comparative analysis on the best high yield returns accounts offered in banks and mention their interest rates, their AERs, minimum deposit requirements, etc., etc., etc. So you can have a look at these websites and pick a bank rather, which best suits your interests. And all you have to do is start investing.